Boy, oh boy, oh boy, interest rates are on their way down. We're going to see just how far that can go. What is the market pricing in? And I'm going to look at a study they did of real estate agents across the nation about what they believe about the market, where it's headed. Is real estate still the place to be in? Ultimately, what we believe is what comes true. And what do you believe about the real estate market?
Ironically, this is not far from the truth. Do you believe in fate, Neil?
No,
Why not?
because I don't like the idea that I'm not in control of my life.
I know exactly what you mean.
But what we believe does have a big impact on what the market's going to do, and what consumers believe also has a big impact on the market. And the biggest thing that's going to influence that is going to be rates. And what is the market starting to believe? So we are definitely getting lower rates. We are down now close to 6.5%. You'll notice there's a few lines here because it depends on how they're measuring it. But ultimately, we are on the way down, right back into the mid sixes where we hadn't been in a long time. This is the only stat that I am really paying attention to right now for market sentiment. So this is the next Fed funds meeting, and 86.4% of the market is now predicting a 0.25% cut. We have a ton of inflation data coming out, employment data coming out this week. And I want to keep looking at that chart, because if the unemployment and the employment data comes out the way I believe a bigger rate cut could start getting priced in. More rate cuts could start getting priced in to the Fed funds rate, and that's going to drive rates lower. We're going to see. But I wanted to look at what real estate agents think across the nation as they look at the real estate market. So this is a Zudilio, I think I said it right, Resi Club Real Estate Agent Survey, as told by 12 charts. And I'm not going to go over all the charts, but I want to go over the one that I thought would have the most impact on kind of what we think and get your thoughts, because I really would like to know what your experience is. What do you believe? So buyers are gaining power. And we're going to focus on the Southeast. So the question was, how real estate agents characterize home buyer urgency in their market today compared to 12 months ago. And this kind of reddish color, reddish pink, I guess, to pink is significantly lower to slightly lower, and then about the same, and then just a little sliver. So only 10% think there's more buyers active in the market now. Most people think it's the same, a little worse, or significantly lower, meaning buyers are participating less in the market. And I would definitely believe on that, especially where rates have been. Another one, how real estate agents say leverage in their local housing market is shifting. So are buyers gaining power or sellers gaining power? And this is a consensus across the nation that buyers are gaining power. In our market, almost 80% think that buyers are gaining power. I'm curious to see what you think. My experience is this is 100% true, especially with all the concessions I'm seeing. Now, I thought this is really good about, like Wayne Gretzky says, where's the puck going? Where do you believe the market's going? So the client segment, real estate agents expect to grow the most in their business over the next 12 months, meaning who do you want to be marketing? Where do you think the market's going? First time home buyers growing, 18%. Investors growing to 17%. Move up buyers, 22%. And sellers downsizing, 40%. I would add to that, it's not just sellers downsizing, because there's a lot of pent up supply where people need to move, they need more bedrooms, they want a pool, whatever the case is. They're just not doing it because their rates are so low. But as the rates fall, it gives them more incentive to maybe make that move. And even though they're not going to get the same rate they had, maybe make a decision to move because the payments could be closer. How real estate agents say they expect home prices in their local market to trend over the next 12 months. And we do in the Southeast, we have, I'm going to call this 45% say that it is going to go down 1 to 5%. And then the other 55% saying it's going to stay flat or go up a little bit. I'm in the camp of flat to about 1% going down. I'm going to go over the very end here where and why I think lower rates is going to move this faster than people think, one direction or the other. And as far as where the market believes, the real estate agents believe the rates are going to be at the end of the year. Let's see, 38%, 6.5 to 7%. I'm in this camp here, about 49%, 6 to 6.5%, and a tiny little sliver thinking 6% or under. I predicted 6.375% at the end of the year. We'll see how that prediction holds up. And then last but not least, I want to go over how real estate agents say their commissions have changed since the NAR settlement went into effect. 57% the buyer side said it stayed the same. 18% said it increased, and 25% decreased. So 75% of the market saying it got better or the same, and on the buyer or on the seller side saying that even more the commissions haven't really changed or went up a little bit. And let's see, I think I have one more here. What real estate agents say their typical commission rate is on the seller side, not changing that much. I thought this was really probably one of the most interesting graphs. 88% say the commissions is 2 to 3%, 3% say more than 3%, and 9% say under 2%. This is kind of where, in my opinion, the market was in general, this 2.5 to 3%, and that's still what I'm seeing on most transactions. And their overall summary or takeaway for the Zudilio Resi Club survey showing a housing market where buyer urgency is cooling, sellers are growing more motivated, leverage is shifting back towards buyers. In the next 12 months, agents expect the most client growth from downsizers and move-up buyers. They also predict home price gains in the Northeast and Midwest, softer trends in Southeast, Southwest, and West, and mortgage rates ending up 2025 between 6 and 7%. And I would agree with almost all of that. The only thing that I would interject after tracking the market is so goes interest rates, so goes the market. And I showed this chart before, but this shows where buyer demand is going to come into the market. And so at 6.5%, the highest mortgage rate U.S. homeowners say they would accept on their home purchase. Look if we go from 6.5 to 6%. That's not quite a double, but it's getting close. And at 5.5%, you can see as rates fall, more and more people want to get in the market. I mean, under 4%, 100% of the people say they would take that, which I definitely understand. And just remember, as rates fall, all these numbers are going to change. Throughout the last year, Zillow's updated their market forecast like 5 different times, maybe 3 different times. But the thing is, they've kept saying maybe a little negative, a little more positive. They're trying to price in what the Fed's going to do and how rates are going to impact the market. I can just tell you, every time rates drop, mortgage applications go up. So do I think the market's going to get shot out of a cannon? No, but I do think August and September are going to be the low mark of this entire cycle that we've been in. And I think transactions are going to continue to increase throughout this year and next year because rates are going to fall, and that's going to put more and more buyers that want to enter the market. And then one last little thing on foreclosures, because I watched a couple of videos on how foreclosures are going up. Remember, it's all relative compared to what. So we can see, yeah, foreclosures went up. We definitely want to pay attention to that. But look how low they are over the long term. Rates are not really, foreclosures are not really going up when you say compared to what? Compared to where they are historically. Now, we want to pay attention to that data continues to go up, then yeah, that's something to be looking at. I honestly think there's not going to be a big jump in foreclosures because most buyers, especially people that bought other than the last few years, have tons of equity, super low rates. You're just not going to see that coming to the market. But again, we'll track that and more. So we're going to look. We got some really good data coming out this week on employment data. If more rate prices or rate cuts get priced on the Fed funds rate, you are going to see interest rates fall faster, not slower than what people think. We're going to track all that data and more. And remember, what is your daily success plan? I don't care if you're rowing upstream or downstream, you still have to row. Maybe you have to row harder, but if you don't know what your rowing looks like every day, reach out to me, figure out, let's brainstorm, what is the daily success plan that you should be doing day after day after day? I have to have one. You have to have one if you're a real estate agent, and ultimately we can support each other in having a great 2024 and 2025 and 2026, because I believe that's what's on tap. All right, as more information becomes available, as always, I'm going to cover right here. Have a great day, great week, and I'll talk to you soon.